Good afternoon, everyone. Welcome to today's online webinar here with Quest Trust Company. For those of you guys who don't know me, my name is Haley Gant, and I'm one of our certified IRA specialists here at Quest. And if you are familiar with our webinars here, you know that you guys see me a lot introducing all of our different speakers on here, doing a lot of the announcements for the webinars that we host. But you guys actually get to see me teach class today. I'll be teaching today's class over self-directed IRA basics, kind of a foundations of wealth building with self-directed IRAs. So today's class is a great presentation if you're maybe not quite as familiar with self-directed IRAs and how they can be used. This class will be a great introductory foundations presentation that hopefully will get you guys thinking a little bit differently about how you save for retirement. But not only am I going to walk you through some of the basics and introductory topics here, but I'm also going to kind of plug some of our other classes and presentations that we host here at Quest. And if you guys have questions, be sure to let us know here in the chat. I do actually have Madison, she's actually one of our interns, but to be honest, guys, she is rocking it. She's been here for a few weeks. If you guys have any questions, be sure to send them to the chat. And you will also see her sending some of our links here as well here on these next few slides. So I know a lot of you guys out there, you've seen me at the events, you've seen me introducing a lot of these classes, but if it's your first time joining us, first of all, welcome. We're super happy to have you here. But a little bit of background about me, how I came to, pretty much educating investors all across the US about self-directed IRAs almost every single day. I actually come from a background in real estate. I've grown up in the industry pretty much my entire life. My parents are real estate investors, and I had no choice but to grow up surrounded by everything real estate. I'm an only child. It's what all the conversations over all the family dinners were about growing up, was about all different types of real estate investments. And through that, I actually learned about self-directed IRAs when I was in high school, believe it or not. I remember my mom was telling me why they were buying a certain property in her Roth IRA because they weren't going to have to pay any taxes on the gains in that account. And to be honest, I was in high school. I was like, cool, that probably doesn't matter that much, kind of good piece of information to know. But lo and behold, here I am almost 10 years later, teaching people about it every single day. And you might notice that I get very passionate about speaking about self-directed IRAs. And it's because I've actually personally seen the impact that they can have on people's lives. I've seen it in my own life with my parents, my own IRA in the few years that I've been with Quest, and several clients that I've kind of helped along the way in my 5 years that I've been here with Quest here in Houston, Dallas, and back in Houston again. So there's a lot of different ways that you guys can take this information and apply it to your own situation to build long-term wealth. And you're going to hear me mention that the long-term wealth, the long-term plan, because that's what this is really all about. It's so important that you not only think about how are you making money and generating income today, but how are you taking steps today that will help you build exponential wealth in the next 5, 10, maybe even the next 20 or 30 years. So I hope that you guys enjoyed today's class. If y'all have questions, be sure to put them in the chat. I actually do have the chat pulled up here on my computer. So if you guys have questions that are relevant to the slide that I'm speaking about, I'll try my best to answer them as we go through the presentation. But if you have any questions that are unrelated to what I'm talking about, send those anyways, and I will get them answered here at the end. Now, a couple of quick announcements. I will have these at the end of my slides as well, but our next big event that we have coming up will be the Quest Summer Intensive this July. It is 3 Fridays in a row. We are going to be doing a deep dive into the different types of investments that you can actually hold with an IRA. So on each Friday, we are going to go into different investment types. The first day will be all about holding real estate in your IRA. The second day will be all about investing into multifamily and private placements. And last but not least, July 25th, that third Friday, we will be going deep into notes and private lending with IRAs. We'll be bringing out about 15 different guest speakers to this event. It is a bit of a larger scale production, so this does have a ticket price here. But if you guys check out the links that Madison has sent, you can get your tickets online online through Eventbrite pretty easily. And if you can't attend any of the days live, you will get a copy of the recordings as well at no additional cost. So we are super excited for this event. This will actually be our last online conference for a while, starting up in August. First week of August, we are bringing back our in-person events in our Texas offices in Houston, Austin, and Dallas. We will be kicking it off strong the very first week of August, bringing back, I believe, lunch and learns to all 3 classrooms every single week, just like we did before the pandemic started. So if you guys are in Texas, if you guys are outside of Texas, be sure to get your tickets to the summer intensive. And once we do bring back those in-person events in August, we will continue to live stream everything online directly here through Zoom and through YouTube as well. So if you guys aren't local or you're not close to any of our Texas offices, you will still be able to access all of our webinars and education just like you can now. Just be aware that our schedule will slightly change, but we've got some time for that. And you'll see several newsletters go out about that leading up to the month of August. Now, my other quick announcement that I have for you guys here today is to join me for our virtual networking happy hour. This event is the first and third Wednesday of every single month. It's completely online through Zoom. And whereas our weekly webinars where we give presentations are kind of set up as a Zoom webinar where, you can't share a camera, you can only see me right now. These virtual happy hours are actually set up as a Zoom meeting. So everyone gets a chance to share their cameras. Everyone gets a chance to introduce themselves to the group. And at every single happy hour, we have anywhere from 50 to 70 investors join us from across the US. And it's really created a nice little network of real estate and IRA investors. And it's been really great for a lot of people to continue to build those connections because in many parts of the country, these in-person events aren't quite coming back just yet. And once again, even once we start up our in-person classes and events, we will continue to do the virtual networking happy hour. We might move it back to once a month, just depending on how crazy our schedules get. But we will still keep doing it. We've had a ton of positive feedback from this event. And it's actually this Wednesday at 6:30 p.m. Central Time. Be sure to click that link that Madison just sent there in the chat. And you can RSVP for that one very quickly as well. So that's all I have for my quick announcements. Let's go ahead and get right into the presentation. Before we get started, just a quick kind of commercial about Quest. Again, I know in these webinars, we get a lot of new people that join us every single week. So again, if it's your first time with us, welcome. Here at Quest, we are very passionate about teaching investors how to invest with self-directed IRAs, how to build tax-free long-term wealth. And we also really like to bring out a lot of different guest speakers to our events. We are the largest self-directed IRA custodian in the state of Texas, and we are one of the largest in the country as well. Now, one thing that really does set Quest apart from our competitors is the customer service that we offer, as well as our education that we put on. Guys, we put on a lot of webinars. We love bringing in different guest speakers. And we archive all of our classes right there on our YouTube channel. So if you guys are on YouTube, it's a fantastic resource for education. I actually watch various YouTube channels all the time to learn about things. So over the past year, Quest has put a lot of effort into growing our YouTube channel. If you guys are not subscribed to us on there, be sure to go subscribe to us on our YouTube. And you can rewatch today's class as well as all of our other classes that we have hosted recently here at Quest. We do have about 20,000 clients nationwide. Even though physically our offices are in Texas, we do operate in all 50 states. And some of our clients even invest into assets outside of the US. So you've got a lot of freedom, you've got a lot of options. And, if you guys ever have questions, our staff is more than happy to help. Again, most of our staff is based here in Houston, which is where our corporate office is, which is where I am teaching this class from today. But we do have offices in both Austin and Dallas as well. And we're a pretty good sized company, got about $2 billion in assets under our management. And the reason why we like to touch on that is because all of this $2 billion in assets under our management is all privately held assets that our clients have self-directed their IRAs into. So as you kind of see and learn today, there's a lot of different ways that you can apply self-directed IRA investing. And there's a lot of people doing this out there, but it is definitely a very small percentage of the overall population. So if you guys are wondering, why haven't I heard of this before? Why didn't I know about this 5 or 10 years ago? To be honest, it's really just because there's not a lot of companies out there that specialize in holding these types of assets in an IRA. And even once you break it down to kind of our niche of the industry, there's even less companies out there that do the type of education that we offer. So I hope you guys learned something today. I hope you guys go check out our other classes and learn something from there as well. But wrapping up this slide here is probably the most important bullet point on this slide, and it is our disclaimer. So please be aware that at Quest, we do not give tax, legal, or investment advice. It is extremely important that you make sure that you do your own due diligence before you enter into investments with your IRA, or even when you enter into investments with non-IRA funds. It is very important to understand the role of you as the IRA investor and account holder and Quest as your IRA custodian. In these transactions, Quest is a neutral party. So we are not here to tell you if it's a good or bad investment. We cannot structure your paperwork for you. It's really important to please make sure that you do not rush into investments with people that you do not know, and make sure that you take the time to make sure that you're using the right professionals to structure your investments and the paperwork properly. Really cannot stress that enough. But now that that's out of the way, let's go ahead and get into the meat of the presentation here. So the very first slide here, what is a self-directed IRA? You guys have already heard me use this term several times in the first couple of minutes of this presentation here. But to be completely honest, the IRAs that we hold at Quest legally are exactly the same as any IRA that you have at any other custodian. The only difference is the types of assets that your IRA custodian allows you to invest in. So most Americans out there, they have a financial advisor. The financial advisor invests their IRA into various stocks, mutual funds, kind of making sure that retirement portfolio is diversified. But at the same time, that financial advisor or wherever you're holding your IRA, say it's at Fidelity, E-Trade, Charles Schwab, any of those more traditional custodians, your IRA, no matter how well it might be diversified there, at the end of the day, it is only invested into publicly traded assets. Things like stocks, mutual funds, other types of publicly traded securities. This is what 98% of Americans only invest their IRA into, is those publicly traded assets. And again, it's not because, self-directing your IRA is a bad idea. It's because most people out there have no idea that you can actually invest into real estate with an IRA, or maybe use your IRA to be a private lender. So again, that's kind of why we like to do the type of education that we do here at Quest. But at the end of the day, the IRAs, no matter where you have your IRA held, the accounts themselves are exactly the same. What we see a lot of people do is they might have their more traditional, IRA held at maybe Fidelity or Charles Schwab, and they might transfer part of their balance to Quest to invest it into real estate and other types of privately held assets. To be completely honest, most of our clients hold IRAs at both types of custodians, because having your funds diversified is one of the most important things that you can do. We all hear you should never have all of your eggs in one basket. But that being said, at Quest, we believe that you are not truly diversified unless you have at least part of your IRA invested into privately held assets. And even beyond that, these privately held assets, such as real estate, notes, private placements, they are actually tangible assets. They're physical. You can drive by, you can touch it, you can see it. Whereas if you have all of your IRA invested into the stock market, and the stock market takes a big dip, like we know it all likes to do, every couple of years or so, at the end of the day, there's not an actual tangible asset behind that, backing up the value of that investment. Versus if you have part of your IRA invested into a real estate property, or maybe a note secured by that real estate property, that property is physical. It's probably going to be appreciating in value each year. And just really cannot stress that enough, how important it is to be diversified and to at least have the base level of education about the different types of assets that you can actually hold in your IRA. Another big benefit here is the tax savings. This is why we have IRAs to begin with. Our IRAs are taxed differently by the IRS than we are as individuals. Every year, as an individual, you have to pay your taxes, file your tax return, pay a good chunk of your income back to Uncle Sam. But as you're investing with your IRA is technically a tax-exempt trust. So what does that mean? Basically, whenever you do investments with your IRA, all of that profit that you make from those investments goes back into your IRA. So you don't see that profit today, but it grows completely tax deferred or maybe tax free, depending on what type of account you have. Now, I'm an economics major. I went to Texas A&M, and so I always like to talk about the opportunity cost here. Whereas as an individual, if you think about how much you pay in taxes back to Uncle Sam each year, your IRA does not lose that portion of its income through having to pay its annual income taxes, because your IRA, it all grows tax deferred or tax free, which I'll get more into here on the next slide. So when you have the ability to avoid taxes on the investments that are being held in your IRA, and then you add on the ability to compound that over the course of the next 5, 10, 20 years, there is a really big opportunity for building wealth here and potentially avoiding taxes altogether on your real estate investments that you hold in an IRA. Now, I'm going to go ahead and pause here because I've been getting really deep into this slide. I will let you guys know if you have questions about this, if you want to learn more kind of on a one-on-one basis, reach out to us. Madison, if you can put our IRA specialist email there in the chat, email an IRA specialist. We are always happy to set up a free consultation with you one-on-one. We'll explain this all over again, however many times it takes for you to understand how this process works. And we'll tailor the conversation to your personal situation there as well. So kind of wrapping it up on this slide here, one of the most important benefits of having a self-directed IRA is having the ability to invest into the things that you are knowledgeable about and the things that you are passionate about. Now, not only does your IRA go tax deferred or tax free, and you can compound that over the next 5, 10, or 20 years, but when you then add on the ability to invest into tangible assets that you maybe have a certain niche in real estate. Maybe you like rentals. Maybe you like private lending. Maybe you like owner financing. There are so many different ways that you can apply the knowledge that you have as a real estate investor to the money that you have sitting in your IRA or maybe in your old 401k that maybe you left that job 5 years ago and it hasn't really done anything since then. Educate yourself about all of the true investment options that you have with your IRA, and then apply that knowledge that you have as a real estate investor. And I guarantee you that you will build a lot more wealth over the course of your lifetime versus just letting a financial advisor hopefully make the best decisions for you. Hopefully your money does well in the stock market. We all know how that goes sometimes though. So there's a lot of different ways that you can benefit from self-directed IRAs. And again, just to really emphasize, there is no legal difference between the IRAs that we hold at Quest and your IRA at any other custodian. The only difference is the types of assets that your custodian allows you to invest in. So this next slide here has a couple of statistics here, and this is just to really kind of bring forward the real issue that Americans have when it comes to saving for retirement. If you think of where you are at now, no matter how old you are, whether it's 20, 30, 50, maybe you're already getting really close to retirement age. The way that Americans have traditionally been taught to save for retirement absolutely does not get you to where you need to be. Now, we definitely encounter people, they've maxed out their 401k every single year. Their employer has been matching. But at the same time, they don't really have control over where that money is invested. So maybe it's only grown by like 5 or 6% per year. even when you're maxing out all of your contributions with those traditional investment options, it's probably not enough to get you to where you need to be by the time you hit retirement. And this is something that's really serious that I think everyone starts thinking about, because your retirement is not going to save for itself. It's all about taking the right steps today, planting the right seeds, and using the knowledge that you have as a real estate investor to grow that money, kind of do just one or two investments each year in the IRA, and continue to do that over the course of your lifetime, so you can always be keeping that long-term end goal in mind. And this figure right here can be really scary for a lot of people. Experts say that you should have anywhere from $1.5 to $1.7 million by the time saved by the time you reach retirement. Now, most Americans out there are not on par to reach that goal. And I know, as a real estate investor, I actually do invest into real estate myself. My long-term goal is to not be working a 9 to 5 until I'm 60 or 70 years old. But unfortunately, a lot of Americans are in the place where that might become their reality, because they are not on track to be able to have enough saved. So I think it's really important that you learn about these different types of alternative assets that you can hold in an IRA, because if you do it right, the opportunity for wealth building, again, could potentially be exponential, and just a really big opportunity for growth there. Another statistic here, just to kind of put it into real terms for you guys, most Americans will spend about 55 to 80% of their pre-retirement income each year to maintain their lifestyle. And there's also something called the 4% rule. I really like this one. If you divide your annual retirement income, however much you want to live off of, by 4%, that will give you a good estimate of how much you should have saved by the time you reach retirement age. So for example, if you need $50,000 a year in retirement, you should plan to have $1.25 million saved. And that's living pretty conservatively, not counting inflation either. If you need $80,000 a year in retirement, you should plan to save $2 million by the time you hit retirement. Is what you're doing today on track to get yourself there? For most people, it's really not. So take this opportunity to just learn about the different investment options that you have. I always like to tell people, even if you don't see yourself self-directing your IRA today, lay the foundations, get the right education, because you never know when a good deal might come across your plate that might make a really great IRA investment. And at that point, once that happens, you really don't want to be starting from square one. It will help you out tremendously if you've already maybe done a one-on-one consultation with one of our IRA specialists. You've already got kind of a game plan in mind for how you're actually going to make this happen. And one of the very first steps to understanding how to self-direct an IRA is understanding the types of accounts that you can be self-directing. So at Quest, we actually hold 7 different types of accounts. And remember, self-directed really doesn't specify a specific type of IRA. To be honest, it's really just a marketing term that shows that you actually get to choose the investments that go into your retirement account. But we actually do have 7 different types of plans that can be self-directed. And the reality of this is most Americans out there, most families, don't just have one retirement account. More commonly, what we see is maybe it's a husband and wife, maybe they've got some kids, and maybe the wife has an old 401k where she left that job years ago. It's just sitting, hasn't really done much with it. But maybe she also started a small Roth IRA outside of that, also doesn't really have that much in there. Maybe the husband has a 401k where he's looking to leave that job soon, looking for different options of where he can roll that over. And maybe he has a health savings account through that employer as well. So one of the things that I think is really important when it comes to understanding these 7 different types of accounts is to have that one-on-one consultation with one of our IRA specialists. All of our IRA specialists have gone through some pretty extensive training internally at Quest. A lot of us are also CISPs, which is a certified IRA services professional. And that's actually a designation given by the American Banking Association. So long story short, we are nerds, we love IRAs, and we can really help to tailor the conversation to your personal situation, depending on what types of accounts you might currently have between you and your immediate family. Or if you're looking to start up some new accounts, we can kind of give you an idea of which types of accounts you might qualify for and which ones you might be able to make contributions to. So, to kind of go through these a little quickly, most Americans have their funds in some sort of personal plan. Now, most Americans also have their funds in some sort of tax deferred account, which would be like a 401k through your employer or a traditional IRA. Now, whenever I say tax deferred, basically what that means is none of the income, none of the growth to your IRA is going to be taxed while that account is growing. But more than likely, when you started your 401k and you're making contributions, and definitely if your employer was matching those contributions, typically there's some sort of tax deduction involved there. So since the money, when it initially went in, it was tax deductible, that means that everything that grows in that account grows tax deferred. So none of it is going to be taxed until you actually go to take out those distributions later at retirement. So what does that mean for you guys? If you have $1 million in your traditional IRA, you don't actually have $1 million because that money has not been taxed yet. So it's definitely something that you do want to take into consideration and be aware that as you take your distributions later at retirement, at that point, they will be taxed as ordinary income, just kind of based on how much you take out each year. So 9 times out of 10, whenever you have your 401k with an employer, you're still employed there, you're not eligible to move those funds yet until you leave that job. Now, once you leave that job, most times that is when you are now eligible to roll over that 401k into a IRA. And 9 times out of 10, your 401k will roll over into a traditional IRA without any tax implications, because they're both growing tax deferred. But as we are real estate investors and we think a little bit differently, I always love to make it a point to educate investors about the ability to invest with a Roth IRA. Now, I firmly believe, again, I can't give tax advice, but I firmly believe that every American out there should have a Roth IRA. That's the IRA that I use for my investments, because a Roth IRA is going to grow completely tax-free. Whenever you make contributions to a Roth IRA, it's after tax dollars. You don't get any sort of tax deduction whenever you put money into that account, but that allows everything else that grows from there to also consider to have already been taxed. So if you grow a Roth IRA to $1 million by the time you hit retirement, all of that $1 million is actually yours. It's not going to be taxable once you go to take out those distributions. And another huge benefit of the Roth IRA is that eventually when you do pass that account on to your heirs as well, they inherit that account completely tax-free. So it's a great way to pass that wealth on to your heirs or the next generation without putting a big tax implication on them whenever they inherit that account. Now, one thing that we see a lot of people do as they are self-directing their IRAs is something called a Roth conversion. This is definitely something that should be on your radar if you are self-directing your IRA, because as you're self-directing your IRA into these different types of assets, depending on what you're investing in, you have a really big potential to really grow that account by the time you hit retirement. So you do actually have the option to move funds from a tax-deferred traditional IRA into a Roth IRA that's going to grow completely tax-free. How do you do this? Again, it's called a Roth conversion. And basically, whatever amount you move from your traditional IRA into your Roth IRA, that amount is going to be added to your taxable income for the year. You'll get a 1099 from us at the end of the year. And at that point, you'll just pay ordinary income taxes on whatever amount you've decided to convert that year. You do not have to convert your full IRA. we see a lot of people that might just convert small pieces at a time each year. So you're not necessarily creating a really big tax implication for yourself within 1 year. Now, one last thing about Roth conversions that I always like to mention is anytime that you have an upcoming investment with your IRA, ask yourself, would it make sense to convert these funds to a Roth IRA before I do this investment? If you have an investment coming up that you think is going to really appreciate or really pay off nicely, maybe in the long term, it might make sense to go ahead and do a Roth conversion of just the amount that you need for that investment. That way, all of the income and the profit that comes back into the IRA from that investment is now in your Roth IRA. It's completely tax-free, and you can immediately turn back around and reinvest those funds and continue to grow that Roth IRA. It is something that I personally think is so important. If you guys have not looked into that option, talk to an IRA specialist. Also talk to your CPA so they can give you the tax advice based on, all of the factors of your situation as well. But if maybe this is like a year that you might have a lower income, maybe you're starting your business, maybe you're switching jobs, sometimes these years might make a lot of sense to go ahead and do a Roth conversion. If your income is, showing lower, maybe you're in a lower tax bracket for the year. But again, if you guys have more questions about that, just let us know. Drop them in the chat. I have it pulled up here and I will get them answered for you. Moving right along, these employer plans here in the middle is the second category of plans that we have at Quest. And these plans are really great for people who are self-employed. If you are self-employed, you do and you pay yourself self-employment income out of your business, then you qualify for these three plans in the middle. To be honest, the most common ones that we have are the SEP IRA and the solo 401k. In my 5 years at Quest, I have only ever set up one simple IRA. So they're not quite as common to be self-directed. But if you are self-employed, these plans can be really great for a couple of reasons. One, they allow for much larger contribution limits. With the SEP IRA, for example, you can contribute 25% of your self-employment income up to $58,000 for this year. So it's a much larger amount that you can put in there. And not only that, but a SEP IRA is basically just a glorified traditional IRA. The rules as far as it growing tax deferred it works exactly like the traditional IRA. So another huge benefit of that SEP IRA is that your contributions are also tax deductible. We get a lot of calls from people, kind of right up to the tax filing deadline season. And they say, hey, my CPA told me I need to open a SEP IRA. I really need to minimize my tax liability for the year. And they're able to use that larger SEP IRA contribution to get a tax deduction and minimize their taxes that they actually end up paying that year. So huge advantage there as long as you have that self-employment income. And last but not least, for the employer plans here, some of you guys have probably heard of this before, is the solo 401k. Now, the solo 401k is a great plan. It has a lot of advantages, but it absolutely is not for everyone. And the reason I say that is because the solo 401k actually functions totally differently than any of the other accounts that we hold here at Quest. It's a completely different set of plan documents. They're a bit more complicated. And whereas with an IRA, Quest acts as the custodian over your account. We process all of the paperwork. We send all the payments in and out based on your direction. But with the solo 401k, you actually act as your own trustee over your own solo 401k plan. So you do actually get the checkbook with this account, huge advantage there. But it's so important that you make sure that you are keeping this plan in compliance from year to year. You understand it. You have a tax advisor that understands how these accounts work as well. But as long as you're self-employed with no W-2 employees, the solo 401k could potentially be a great option for you. Reach out to one of our IRA specialists and we can actually schedule a full solo 401k consultation with you. And we also do have several videos over all of these types of accounts on our YouTube channel as well. Last but not least on this slide here is the specialty plans. the health savings account, and the Coverdell education savings account. Now, technically, these are not IRAs per se, but the rules as far as how you can invest them, the other rules as far as some restrictions, which we'll get into in a few slides, are exactly the same. The HSA and the ESA, kind of abbreviated for short, they function just like all of our other plans, but you can actually access the money today completely tax-free to pay for any of your qualified health expenses or your children's qualified educational expenses anywhere from kindergarten up until age 30. So I believe that you should sit down with an IRA specialist, go through each one of these different types of plans, and see if it might be a fit for you and your family. Because the HSA, the Coverdell, those are great plans. If you understand how to utilize them, it's a great way that you can self-direct these accounts, but not have to wait until you're 59 and a half to actually be able to access that money without any penalties. And once again, most of our clients have multiple types of accounts. They might have a traditional IRA. They might have a Roth IRA. The wife might have another Roth IRA. And where the magic really comes in here is that all of these different types of accounts can actually be partnered together for almost any type of investment that you can do with an IRA here at Quest. There's a good chance that you can partner these accounts together, divide up the percentages of ownership, and essentially grow multiple buckets of money all at the same time. Partnering is a fantastic strategy. We do a ton of education on it. It's actually how I've grown my small Roth IRA. I've partnered it with my mom's Roth IRA. And even just from owning like 5 to 10% of a few different investments, my IRA was able to almost triple in size in just a few years, just from owning very small percentages. So even if you are just now getting started, if you're opening a new account and making contributions, just for those first few deals, you might have to be a bit more creative as far as where you invest that money with a small amount, but it absolutely is possible. We see a lot of people do it, and there's a lot of ways that you can grow these IRAs, whether you're starting with a small amount or a large amount. And we're here to help walk you through all of those logistics here at Quest. Moving right along, these are a few of the various different investment types that you can actually hold with your IRA. Now, you've already heard me mention these here just a little bit, but we actually break this down into 3 different categories: real estate, private entities, and promissory notes. Real estate would be like the direct ownership of land or rental properties owned by your IRA. Private entities, we see a lot of this. It's a great passive option, again, as long as you're doing your own due diligence. But we see a lot of people that invest their IRAs passively into multifamily deals or commercial syndications, maybe startup companies, private bank stock, privately held companies. We see a lot of those passive investments because, to be honest, a lot of people really like to be passive with their IRAs and just invest into other people's deals. Last but not least is promissory notes. And this is actually the largest class of assets that we hold here at Quest. At Quest, we fund just about 400 new transactions each month, and almost 50% of these are some sort of promissory note. So we see a lot of people that like to purchase existing notes with their IRAs, and we see a lot of people that like to use their IRAs to be passive private lenders on other people's deals. And if you are structuring these loans properly, you've taken the time to do the due diligence and structure it properly, where if for any reason your borrower stops paying or defaults on the loan, your IRA could potentially foreclose and take that property as collateral. So even though your IRA is just the lender in this deal, your investment is still protected, again, just as long as you make sure that you are structuring these deals properly. Now, as you'll see here on the next slide, there are some restrictions when you're investing with your IRA. And, things really need to be kept at arm's length in between yourself and your IRA investments and the money going in and out of your IRA. So that is one of the many reasons why we really like, or why we see a lot of people that really just like to be passive. It's funny, by a small margin, real estate is actually the smallest class of assets that we hold at Quest. Private entities is right behind that. And then promissory notes, again, is about 50% of the transactions that we fund here at Quest. But one important thing to kind of note here before we move on to the next slide is whatever you might be skilled in, whatever type of real estate you might be knowledgeable about, there is a way that you can invest into that type of asset more than likely with your IRA. It kind of just depends on what you're interested in and kind of applying these tools to your network, your daily conversations as well, so you can find these deals with your IRA. So moving right along here, let's get into the fun stuff, the rules and restrictions, the things that you can't do. I hope that throughout this presentation so far, you guys have kind of been thinking a little bit differently about, hey, I could use my IRA to do this. This sounds really interesting to me. But as you're moving forward and self-directing your IRA, it is extremely important to be aware that there are some restrictions. To kind of put it conceptually, IRAs were created back in the 70s to give Americans incentives to save for retirement. So therefore, IRAs get really awesome tax advantages to help us save for retirement. Therefore, the IRS has set some rules in place where they basically do not want you personally benefiting right now from your IRA investments. You as the IRA account holder can certainly self-direct the account, choose which types of assets are held in there, but all of the funds go just in and out of your IRA. Quest processes that at your direction, but the money never passes through your hands or through your personal bank account. And even though you're kind of making the investment decisions for your IRA, you never actually touch that money. So there's kind of a line here between you and your business and your IRA that the money cannot be commingled and kind of cross that line. So now that you understand that, hopefully, if not, just give us a call. We'll walk you through it. There's a few other people that are restricted from benefiting from your IRA investments as well. These are what we call disqualified people, where basically, I can't use my IRA to invest into my own business. I can't use my IRA to loan myself money. Those are clear personal benefits to me from my IRA, which I cannot do. There's just a few other family members that those same restrictions also apply to. And it's basically just the people directly up and down on your family tree. So it's you and your spouse, your parents, your grandparents, your kids, your grandkids, their spouses, and any companies that these people might own or control, manage, are just as disqualified as that individual. So again, you, spouse, parents, kids, their spouses. These are the people that your IRA cannot loan money to, cannot invest into their business. Or say if I personally am raising capital for an apartment syndication, I can't use my IRA to invest into my own syndication that I am the managing member of. Same thing, my mom couldn't invest into my own syndication. She couldn't use her IRA to loan me money. Those things are what we consider, or what the IRS considers, prohibited transactions. And you just really want to make sure that you're following these rules, especially if you have questions. Hey, is this allowed? Is this a gray area? Reach out to us here at Quest, and we can always walk you through what the rules are. If something falls in a gray area, we'll definitely answer as much as we can, but it definitely comes up sometimes where, you may need to seek some further legal advice from an attorney who is experienced in the space, just to make sure that you are, taking the right risk for, or, taking the right steps to make sure that you're avoiding risk and things like that. But again, if you have questions, let us know, and just keep in mind that you cannot commingle your own investments, your own funds with your IRA funds. They will always stay separate. So now that that's out of the way, let's actually walk through the process of how you actually do this. So the first step to self-direct an IRA is to have a self-directed IRA. So give us a call at Quest. We'll help you get your account established. We have several IRA specialists on our team that, their main job is to do the one-on-one consultation with you, hold your hand throughout the whole process, and basically be your main one-on-one point of contact as you're learning how this exact process works. So reach out to us. We'll connect you with a good point of contact there. We'll help you get your IRA open, and we'll help you get your IRA funded as well. Now, there's a few different ways that you can fund your IRA here at Quest. You can transfer funds from an existing IRA that you have, and we see a lot of people do this. You can actually transfer the cash back and forth between your IRAs at two different custodians at any time, however you want to. Now, since we hold different types of assets than most other custodians, you can't transfer your stocks over to Quest. You can't transfer your promissory note that you hold at Quest over to Fidelity because the types of assets that we hold aren't really compatible with each other. But say if you have just, $50,000 sitting idle in your Fidelity account, not really doing anything, you could transfer that, part of your IRA over to Quest and self-direct it into these different types of investments. Also, if you have a 401k from a previous employer, you are eligible to roll those funds over into an IRA here at Quest. Or we see a lot of people that just start new accounts, new contributions. Learning how to invest with that small dollar IRA is something that, we do a lot of education on. There's a lot of opportunities out there. And if you are putting these conversations into the people that you're networking with and the people in your network as well, there's a lot of different ways that you can structure deals where you can actually use a pretty small amount, at least to get started for those first few deals as you are growing the IRA. Now, one other thing I do want to touch on here when it comes to step number 2 here is the time frame. To fund your account at Quest, especially if you're moving funds from a different custodian, that time frame is completely dependent on how quickly or how slowly they want to send us those funds. That process can take anywhere from 3 to 5 days to 3 to 5 weeks. It just depends on where the funds are coming from and how quickly they can process that. Now, the reason why I like to mention that here is because internally at Quest, our processes are very fast. It's always going to be 24 to 48 hours from the time that we have the executed documents that we need. So our timeframes are very fast. But if you have a deal that comes across your plate and you really want to invest your IRA into this deal, but it needs to be funded by Friday and you're going to miss out, it's really important that you make sure that you've already started the process to get the account open and at least get it partially funded. That way, once a deal comes across your plate, boom, send us the paperwork. We can fund that deal in 24 to 48 hours. And we're not waiting a couple of weeks on your custodian to send us those funds. And then you end up missing out on the investment. A good time frame that I always like to give people is if you see yourself self-directing your IRA in the next 3 to 6 months, go ahead and get the account open. Go ahead and get at least some of your funds moved over. That way, once that deal comes across your plate, you're ready to move and we're not waiting on your funds to arrive at Quest. And the reason why I like to give that 3 to 6 month time frame is because at Quest, if you have an IRA open with no investments, it is $30 a quarter or $10 a month just to have that account open and ready to go for when that investment comes across your plate. So if it's going to be a couple of years before you're going to be doing something, don't open up an account just so we can charge you that quarterly fee. But if you know that you're going to have something coming up within that next, 1 to 3, maybe 6 months, it's not going to cost you hardly anything to have that account open. Go ahead and at least get it partially funded. That way there's no lags in that time frame there. Now, once you locate your investment, give us a call. At this point, your IRA specialist will help to introduce you to our transactions team. And our transactions team will be the one to actually fund your investment for you and review your investment documents to make sure that we have all of the signatures that we need. Now, we do have a brand new feature actually through our client portal called the QTC Investment Hub, where we have a little transaction tracker here. So in the old days, right here, step number 4 here, you'd have to complete some forms. You'd have to go through Adobe Sign and fill out what we call our direction of investment. But now you can actually upload all of this information directly through the client portal. And you can see exactly Who is funding your investment? We have Milan here. Big shout out to her. She actually just got promoted to our notes supervisor this week. So she's fantastic. She's on our notes team. But this is just an example screenshot here. As you can see, this is not a real investment here. But this updates in real time. You can see exactly who is funding your deal. You can upload all of the information directly to the client portal. We can get your read and approved signatures directly through the portal. And it really cuts down on the lag time and the manual work that traditionally gets done between you and your transaction specialist and the emailing back and forth to make sure that we get everything that we need from you is all minimized and really cut down by just uploading everything directly online through the portal. So that's a new feature that we have here. You can also message your transaction specialist directly through the online portal. So really have some cool features there. And if you guys have not utilized this and you are a client, I would definitely recommend that you go check it out. And if you're not a client, once you are a client, once you have your IRA with us, make sure that you use this feature. It really makes everything really simple and really straightforward. All right. So this next slide here, I'm going to warn you, has a lot of text on it. But in my 5 years here at Quest and in my real estate experience before I even joined Quest, these next things I'm about to share on this slide is what I personally think is the recipe for success when investing with a self-directed IRA. Now, this is conceptual. This obviously is not the exact steps because there's no way I could fit that all on one slide, but here's the things that I think are important for investors to do in order to really be successful with their self-directed IRA investments. First and foremost, you have to build a network. Remember, at Quest, we cannot give tax, legal, or investment advice. We also can't provide the investments for you. We're a neutral party in all of this. We're definitely here to educate, to walk you through the logistics and the entire steps of the process. But at the end of the day, as an investor, it is so vital and so important that you have a solid network on your side where you have other people that you can rely on. Maybe people in your network that have done these deals before that you can look for expertise. And also to find these deals, if you have a good, solid network, especially, for example, if you're looking to exclusively invest into notes or you're looking to exclusively invest into multifamily, go out there and find some of these networks and kind of ecosystems that are out there that tailor to these types of investors, and make sure that the people in these groups, they align with the things that you're looking to do. You find a few solid people that you can add to your team, because first and foremost, to find the deals, to make sure they're structured properly, it really comes down to you building a network and making sure that you're taking the time to do the due diligence on the people or the groups that are in your network. Second, know how to introduce the conversation. Unless you're an IRA specialist or you've been familiar with these, you probably don't talk about IRAs in all of your day-to-day conversations. Now, I definitely do, but that's because it's my job. But start learning how to introduce the conversation to people as you're networking and as you're talking with them. Because I actually haven't mentioned this yet, but there's a lot of different ways that self-directed IRAs can be beneficial to people. There is your retirement account that you're self-directing, you're saving for your own retirement. But remember how I was mentioning that a lot of people like to use their IRAs to be private lenders? If you're an investor and you're going out there and you need capital for your deals, a lot of people like to use their IRAs to passively invest with other investors. So if you know how to introduce this conversation to people, it could potentially unlock unlimited sources of private capital for your deals through the use of using other people's IRAs. So there's not just your IRA for your retirement, but you can use other people's IRAs to fund your deals today. So kind of two different sides to that scenario there. Be sure to check out some of our private lending classes where we really go in depth into that. But for time purposes, that's all I'm really going to say about that there. But just know how to introduce the conversation. Hey, do you have any deals? I'm looking to invest. I've got some capital. Or, hey, I've got a deal. I'm looking for some lending. I'm looking for some capital. Do you know anyone who would be interested in investing in this? Do you have an IRA? Did you know that you could use your IRA to invest passively into this deal? And then again, it comes back to building that network, building the rapport, so you can build those relations with other potential investors. But once you have done that, your job as the real estate investor is to go out, introduce the conversation, build the network, and find the deals. Know when to bring an IRA specialist in on the conversation, whether it's your own IRA, whether it's other people's IRAs. Let us explain exactly how it works to you, the exact logistics, and especially if you are looking to use other people's IRAs as private capital, bringing Quest into the conversation is a great way for your potential investors to hear all of the information they need from a completely neutral party. We are never here to push someone's investment on them or push your investment on someone or anything like that. We're here to help explain how the process works and facilitate the account once someone is actually ready to take those steps. But know when to bring us in on the conversation. That way you can focus on the other things that you need to focus on as a real estate investor. Now, once you're actually investing, or once maybe you're working with other IRA investors that are investing with you, be sure to keep the lines of communication open. Understand what the IRA custodian will need and understand your role as the IRA account holder and Quest's role as the custodian. Remember, we're neutral. You need to do all of the due diligence. You choose who you work with. You choose how the deals are structured. But it happens all the time, guys. We'll get a set of investment documents. They're missing signatures. The IRA isn't titled correctly. And our transactions team will respond back to be like, hey, we need some changes here. We need some signatures here. And then we don't hear back for a week and a half. And then we get an angry call from someone and they're like, why didn't you fund my deal? Make sure that you're keeping those lines of communication open to make sure that we receive everything that we need and that you're keeping the lines of communication open with your investors as well. Cannot stress that enough. Extremely important. And there are some also annual reporting requirements that are important to be aware of, things such as fair market values. Sometimes there's UBIT or unrelated business income tax. We have several classes about UBIT on our YouTube channel. It's definitely a bit of a heavy topic, so I won't get too into it today. But just be aware that every year you are going to have to update fair market values for your assets that you hold in your IRA at Quest. Because these assets aren't necessarily like a stock where we can see the exact value of where it closes out each day. No, real estate's different. It fluctuates in value. And so as a custodian, this is something that we are required to report. So just be aware that towards the end of the year, you're going to have to log into your client portal, fill in a few blanks, upload that fair market value, and then it's smooth sailing from there. If you don't do that, we will send you several notices and eventually threaten to distribute your asset. But usually by that point, we get the fair market value. It's usually pretty rare that we actually end up distributing something for that. But be aware that there are those requirements there. And last but not least, no matter where you are investing in real estate, reputation and ethics is everything. This is a relationship-based business. When things go wrong or, people don't treat things how they should in certain situations, word gets around very fast. You want to make sure that you are doing business with ethical intentions, you're maintaining a solid reputation, and that you're taking the steps to make sure that you are protecting your investors. Cannot stress that enough, but if you follow these steps and educate yourself along the way, through each of these, at the end of the day, you will be successful with your IRA investments. Just keep that in mind and reach out to us anytime we can help. Anytime you think that we might be able to help, give us a call, and we're always happy to, fill in the blanks and the logistics where we can. Now, that's about all that I have for the actual educational class portion of this class. I hope that this has been helpful to you guys. I don't see any questions coming through, so it sounds like you guys are all experts by now over self-directed IRAs. But let's go ahead and switch gears for a second and let you guys know about some of the different educational opportunities that we offer here at Quest. I've already plugged a lot of these, but just to kind of recap, our YouTube channel is a fantastic resource. We post new videos every single week. All of our classes, our webinars with all of our guest speakers are all saved on our YouTube channel. So you can watch our long, hour-long classes, or you can watch the shorter versions, the 10-minute kind of like quick snippet videos. We have a ton of those on there, and it's been a really fun project to grow our YouTube over the past year. So if you guys can do me a favor, go subscribe to us on YouTube. I actually have my annual review in a month, and I am just shy of my goal of where I would like for our YouTube to be for subscribers. So go follow that link. We've got a lot of great content on there. Also on our website, we have our education center. We have blogs. We have other pre-recorded videos. We have blog posts that actually Quincy Long, our president and founder, has actually written himself. So there's a lot of great reading material on our education center on our website as well. I've already talked about the virtual networking happy hour that is coming up this Wednesday. At this point in time, we are doing it twice a month, and it attracts investors from all across the US. And it's really built up a great little network of investors that have joined a lot of these happy hours over the last several months. And you guys probably already know this because you're here right now, but we host a lot of different webinars every single week. Be sure to check out our Self-Directed IRA Saturday webinars. On these events, we get anywhere from 300 to 400 people that attend every single Saturday. We bring out some of the higher level speakers that we have in our network here at Quest. And this Saturday, we actually have Brad Sumrock speaking. If you guys are interested at all in multifamily investing, Brad Sumrock is definitely someone you want to have on your radar. He's teaching our class this Saturday, and I'll go ahead and plug this here as well. He's got a big online challenge coming up next week as well. So if you just look up Brad Sumrock on Facebook, you can find the challenge. It's completely free. I'll be speaking on it, and it's a great way to kind of get some exposure to these multifamily networking aspects. So Brad or anyone from your team, if you end up seeing this, can't wait to see you guys next week. He's got a lot of great information to offer about multifamily investing. And we work with a lot of other people as well. We bring in a lot of different guest speakers to our events. And our next big event in July will be the July Summer Intensive. We will have about 20 different guest speakers at this event over the course of 3 days. Tickets are $25, super cheap, and it'll be 3 Fridays in a row, but it's just in the mornings. So it'll be half days, and each day will focus over real estate, private entities, and then promissory notes. And where this class, I know I went deep into a few topics here. This class today is really a basics class. The Quest Summer Intensive will be more advanced topics. My goal for this event was for it to not be a basics event. So I'm specifically asking all of our guest speakers that come out to bring a high level topic. So this event will be great. I'm really excited for it. And you can get your tickets now. They are $25. And last but not least, we do have a referral program. If you are a Quest client and you know someone who could also benefit from having a self-directed IRA, send them our way. Go to refer.questtrust.com or just call an IRA specialist, and we can help get you guys the information to make sure that the person that you refer gets a $25 credit, and you will also get a $25 credit as well whenever they open up their account. So that is all that I have for you guys. If y'all have questions, you better send them quickly because the class is ending here shortly. But here at Quest, we really pride ourselves on the high level of information that we are able to offer to our clients. It's always free to talk to us. It's always free to pick our brains, whether you are a client, whether you have an account with another self-directed IRA custodian, or you're just really looking to get started. We are very easy to get a hold of. Give us a call, send us an email, and you can also chat live with an IRA specialist directly through our website. And I will let you guys know that that's a real IRA specialist on the other end. It's not a robot. It's not someone, off several states away from, us here in Texas. It's actually our IRA specialist that we have assigned different days of the weeks. If you guys are on the chat on a Monday, there's a good chance you'll actually get me answering your questions on there. But that's all I've got for you. I hope that this was helpful. I hope that if you guys are new to self-directed IRA investing, you take the information that you've learned today, you do some more research, you expose yourself to some of the other types of investment options that you truly have out there with an IRA. This is something that I really stand behind. As you guys can probably see, I'm very passionate about this. I've seen it in my own life through my parents. I've done it in my own life as well. And in my past 5 years at Quest, I've helped several clients learn about this. They've started investing, and I've seen a lot of people really be able to build a lot of wealth in ways that they would have never been able to get done through the means of traditional investing, which is what most Americans do in their IRA. So think a little bit differently about the way you're saving for retirement. Think about your long-term plan and start taking the steps today. Because if you don't take the steps today, it's not going to happen. It's not going to save for itself. And 5 to 10, 20 years from now, you're really going to wish that you had started today and started to build that foundation and start compounding that growth so you can not work your 9 to 5 until you're 70 years old, because that's why we're all here, right? But anyways, I don't see any questions coming through. So I hope you guys have a great day. I hope this was helpful, and be sure to join us for the virtual happy hour this Wednesday. And if y'all have any other questions, reach out to us here at Quest, and we're always happy to help. Y'all have a great day.